Today, gold was up better than $60. It's up $64 on the day, one of the biggest up days we've seen in some time in gold. It closed at 1933. We're $110 above the low from Friday. That is a significant move in 1 week for the price of gold. And I've been saying that the support was below 1900. I knew that anything below 1900 was a good buy. Now, it got further beneath 1900 than I expected. We got to about 1820-ish on Friday morning. But here we are, 1933. We've almost recovered the entire decline, because before gold got clobbered, and the reason it got clobbered was, bond rates went up. But it was about 1950. That's where it was. So gold has almost done a complete round trip. So the money has come in to buy the dip in gold, which is what I expected. The next thing for gold to do is to get back above 2000. That's where the resistance is. And to see if we can test that resistance and then break through.
In this compelling update, Peter Schiff delves into the dramatic twists in the gold market, highlighting its astounding rise of over $60 in a single day, reaching an impressive $1,933. Schiff expertly dissects the market fluctuations, explaining the impact of bond rates and predicting a bullish trend. He emphasizes the significance of gold's potential breakthrough past the $2,000 mark and hints at the possibility of even more substantial gains, emphasizing that gold has a long way to go. Moreover, Schiff provides a keen analysis of the synchronicity between gold and oil movements, attributing their correlation to global events, particularly the escalating tensions in the Middle East. Despite some experts downplaying the situation's economic impact, Schiff cautions against underestimating its potential repercussions.
Because once gold really starts to move, let's say we take out 2100, I think these 64 days will be par for the course. I think we're going to have a lot more of these days. In fact, I think we're going to have bigger days. I think we're going to see days where gold is up more than $100 a day, because gold has a long way to go to catch up to where it needs to be. By the way, silver also had a big day today. Let me check the price. Silver had the same type of outside reversal day that gold did a week ago. And so I said the same thing. And here we are, up 92 cents an ounce for silver today. We closed at $22.73. So silver, gold, both looking good. In fact, it wasn't just regular gold that looked good, but black gold. Oil was up about $4.50 on the day, up $4.57. 86.37 is where we went out. And I've been saying, and I said last week that gold and oil are going to be moving in the same direction. And that certainly happened today. We've been seeing them moving in the opposite direction because oil had been going up until its recent correction, and gold was going down because gold was following bonds down. Gold and bonds were falling at the same time, but that is not the correlation that ultimately is going to persist. It's going to be the opposite. Bonds have rallied over the past couple of days despite news that should have sent them lower. I think what's supporting the bond market is the situation in the Middle East, in Israel, with what's happening in Gaza, and the potential that this could blow up into a much bigger situation. People are downplaying this, I think, the significance. Janet Yellen was out there today. I'm not sure where she was speaking, IMF or someplace. And she basically said, oh, it's nothing to worry about, right? The situation there, it's not going to make any kind of impact on the global economy. So it doesn't really matter, right? She really was downplaying the risk of the situation. And first of all, it's another problem on top of a mountain of problems, right? It's the last thing we need. It's not like, everything is great and now we've got this problem in the Middle East. Everything is awful and now we've got another problem that we've got to deal with. But she is underestimating the potential there.
In this last important segment, Peter Schiff discusses the challenges facing Israel, particularly the tough position of Prime Minister Netanyahu. He emphasizes the gravity of the situation, as any response to threats is met with widespread sympathy for Palestinians, both in the Arab world and even in the United States. Schiff notes that this crisis has led to Saudi Arabia backing out of its peace treaty with Israel, highlighting the geopolitical implications. Furthermore, he suggests that Iran may have orchestrated recent terrorist attacks to derail the Israel-Saudi deal. The situation is predicted to worsen, with potential consequences for the global oil market. Schiff raises concerns about the U.S. Strategic Petroleum Reserve being nearly depleted and the possible financial burden of increased military aid. He points out that defense contractors may see gains, but they come at the cost of larger deficits. Schiff's perspective on bond auctions is equally critical, with warnings that the dwindling interest in U.S. Treasuries could spell trouble for the economy. He underscores the importance of owning gold as a hedge against currency devaluation, as the U.S. dollar's value could be at risk.
I mean, there's no, I don't think, good way out of this. I mean, Israel is in a very difficult situation. Netanyahu has no good options, in my opinion. I mean, he can't do nothing, right? He's got to have a serious response to a very serious threat. But again, the minute he does that, you've got all these Arabs all around the world that are very sympathetic to the Palestinians and what's happening there. And even in the United States, I mean, if you have all this sympathy being expressed for the Palestinians in America, imagine what's going on in Saudi Arabia and other countries over there. And I just read, and this is exactly what I said a week ago, or the last podcast, that now the Saudis are backing out of that peace deal, that treaty that they had going with Israel. Of course, now they can't do it, which again, what I was speculating, that may have been the very reason, the impetus for this terrorist attack, and why Iran may have been pushing for this attack, because they wanted to derail that Israel-Saudi deal. They didn't want that. And so now they can't have it because the Saudi royal family, can't do it. But there is no easy way out of this. This is going to get worse, and it's very unfortunate that this is happening. And I don't know how bad it's going to get, but it's not insignificant, and it's going to have an impact on the oil price, which was going up anyway. But that's a problem. And Janet Yellen maybe hasn't noticed, but we've used up most of the Strategic Petroleum Reserve. This is not a really good time to potentially have some kind of disruption to the global oil supply, but it could happen. And there was already going to be upward pressure, and we're spending more money. I mean, there's no question that what's happening in the Middle East is going to lead to more money being spent, more aid, military aid, whatever it's going to be. Again, I mentioned these defense contractors, they're not going up because they don't expect to get more orders. Well, where's the money coming from, right? Bigger deficits. That's the last thing we need, is bigger deficits. We got a bond auction yesterday. Horrible auction. Big tail. The bond market tanked when, the Treasury auction happened. Bond prices, I believe, would be much lower. I think it would be above 5% right now on the 30-year. We'd be making new highs in yields, but for this situation, I think, in the Middle East, which has created a bit of a bid in the Treasury market. But that bid will not last. But that auction that we got was horrific. And what's amazing about these bond auctions is that anybody bothers to show up. I mean, why do people want these bonds? That is the real threat. One of these days, there's going to be a Treasury bond auction, and there will be no bidders. You want to make sure that when that day arrives, you've got all the gold that you need. Because if you don't have it at that point, you won't be able to buy it because the price will be too high. That'll be the end of it. Because if nobody shows up, well, then the party's over. Now, of course, the Fed will crash the party and be the buyer, not of last resort, but of only resort. But that means it's over. That means the U.S. government is done. It can't continue the Ponzi anymore because there's no suckers left to buy. And so it's the American public, the dollar holders, that are the bag holders, because now they own a currency that is going to collapse in value.
Thank you for tuning in to this eye-opening analysis. We hope you found this discussion insightful and thought-provoking. Remember, Understanding the complexities of the financial landscape is crucial in making informed decisions about your investments. If you appreciated the insights shared in this video, don't forget to hit the like button, subscribe to our channel, and click on the notification bell so you never miss an update. Share your thoughts and questions in the comments below. We love hearing from our viewers. Stay informed, stay vigilant, and most importantly, stay ahead in your financial journey. Until next time, take care and invest wisely.